Good morning. Welcome everyone to the weekly live room at binary.com. My name is Chris and we're going to take a look at the Forex market at the charts together. First of all, though, the risk disclaimer explaining that trading for exchange is considered high risk, just like global financial markets. It may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. Alright, so take a look at the risk disclaimer. It just explains that trading is very considered high risk and decisions are all yours to take. So sorry for that delay with starting, but we are going to take a look at the Forex market now together. First of all, though, if you're new in here, take a look at blog.binary.com/weekly trading room, and you don't have to necessarily look at this live, but you can also take a look at the recording whenever you want, because you'll get an email when it's ready to go. With that said, let's take a look at the euro dollar. Let's take a look at the pound dollar, dollar yen, Aussie USD, and of course XAU USD. Before we do that, though, just a quick look at the economic calendar to see what's going on regarding the news events today. We have a bank holiday in China. We have manufacturing PMI, and yeah, for both the pound and the dollar. And we have Aussie cash rate today. So those are big news events. What else do we have this week? Let's take a look. Tuesday, we have again the bank holiday in China. We have New Zealand news. Wednesday, we have ADP figures, which is big. Thursday, we have euro and pound interest rates, which is big. And Friday, we have the NFP plus unemployment rate. So some big numbers coming up this week, so we should be aware of that. With that said, let's head over to the charts and take a look what's going on. Of course, last month, the first month of this year, finally closed. So we're well into 2014. We have defined levels now. We have a new yearly high, low at the moment, right? Temporary though. Monthly candle has closed. So we have on all time frames, on all charts, we have a euro dollar, for example, high, low, close, open of each candle, right? So that's important information now for the market. We have the initial start of the year. With this behind us and with this in mind, we can now look at levels for this month, right? Last month, high, low, all those levels are very important now. So let's take a look at this euro dollar monthly. What happened in January, the first month of this year? We had a bearish candle, right? A clear level that was close to the low here. A close that was only just a couple of pips off. It was about 7 pips to be precise, which means that it was a very bearish close, a very bearish month as well. Now that bearish month, though, however, is within the uptrend. If you look at it from a bigger perspective, this euro dollar is technically still an uptrend. Why is that? Because we have clearly, in our market, we have clearly higher highs and higher lows. So from this monthly perspective, we are making an upside. But there is the potential, as we can see indicated by the purple line, that this is a resistance line, and this could be the turning spot, right? We stopped at the 61.8 fib, we stopped at the trend line. That could be the turning spot for some downside. So that's the dilemma we are having now. Are we in an up or downtrend? We are in an uptrend, but we are at a bouncing spot. If we break that bouncing spot, if we break through the 61.8 and through that trend line, there is a chance to go up to the 78.6 and maybe even the 880.6, right? And 143 and 146. If we don't do that, there's a chance to fall to test the 133 support here. And if we break that, that would be a key level, 133, because then there's a chance to fall down to 129, 127. And if we break that, even further down to 122 and maybe even lower to 113. Right? So that would be the levels, the key levels I'm looking for the euro dollar. For the moment though, because this is still a weekly uptrend, I'm expecting that this downside will bounce off 133 personally for this upside, and then we might retest this top again. And then of course it depends. We could keep within this range and then break out to one way or another, or we break sooner like this, right? That's what I'm expecting at the moment. But if I'm wrong, then this 133 level will be broken and we'll probably make these falls. That is definitely possible, although, as I said, I find it, looking at the wave analysis and other factors, I think it's more probable to see a bounce for upside here at the moment. That's what I'm thinking, or my analysis tells me. So weekly chart though was engulfing twins. You can see, look at this right here, engulfing candles, right? Bearish. So that could mean there's some downside pressure still, but I wouldn't expect the 133 to be broken at the moment. Let's take a look at the daily chart, and you see that basically we've had a correction like this, an upside and a correction. So this correction down could end, for instance, if we put a fib on this first down move, where could that correction end? It could end at the minus 272 at 134, for instance, right? So we could see something like this happen, down, up, down, and then up again. So downside to 134 and then a bounce might seem the path of least resistance at the moment, right there. So that's what I'm looking for this week for the euro. Let's take a look at the pound. Is the pound different? The pound dollar? Not really, because the pound dollar too actually has a bearish candle, but it's not as bearish as the euro dollar. There is some wick at the bottom of the candle, which means there was some buying pressure at the end of the month, last month. Also, the euro dollar already broke the wedge. This purple line, this triangle, the euro dollar broke it to the upside. So that is a difference as well. Now there's one key level, this red line, that's very important for bears and bulls. If that level doesn't get broken, it could still be a bearish move. This upside could just be an upside to bump into resistance, and we could see these fall. All right, and the fall is possible because of this tremendous downside here, and this all could be just a triangle, right? But if that red line breaks, then it's not a bearish triangle, and there's probably going to be a bullish triangle, and we could see a breakout to higher grounds. How high? Well, we can put a fib on this very first move up, and the minus 272 target at 180 would be the primary target. All right, so, but that's only if we break this 167.30. If we don't break it, as I said, we could see a fall to challenge these bottoms here at 148. Oh, sorry about that. Don't want to zoom in. 148, and even lower at 135, I think it is. Let me check. Yes. All right, so important level. And you can see that the price is struggling right here, right at the resistance. A lot of wicks, a lot of sideways move. So that's what we're looking for. We saw a break of this purple line, which was nice, but now the upside seems to be struggling on the pound dollar. So we'll have to see which lines break first, the red or the purple, because the purple could still be a bouncing spot. That would need to break. Plus, I would like to see a break of this 158.60 and also even this top, right? All those are support levels. So let me make those green. Those levels are support levels. So we need breaks of those levels really before downside is really confirmed on this pound dollar. How about the Aussie? Aussie is a bit simpler because the euro dollar and pound dollar, I think, are in tough spots. They're not the easiest situations to analyze and trade. The Aussie, I think, is more straightforward. The Aussie just had a simply bearish candle, and a bearish candle is within a downtrend. It's a clear downtrend. There's no doubt about it. Price is making lower lows, lower highs with these candles. The fractals too. There is that downside momentum, right? So we've had a classical fall out of the wedge, a hook back to the 50 fib, and now falling again. Plus, we've broken this bottom. So in my opinion, there's plenty of space to continue. I wouldn't see, at the moment, I see no reasons why not. And the 272 target, the minus 272 target at 83, 0.8370 is, in my opinion, the target. Now, mind you, there's always the possibility of a retrace of last month's candle. Any candle can get retraced, right? Even a monthly candle. So, in that regard, we could see there's always that potential to retrace last month's candle and then maybe fall. In that regard, last month's high at around 0.91, I would not expect a break of that level, roughly speaking, because that would alter things. You can see, looking at these candles, look at these monthly candles. Each of these highs, right, are lower. So I would expect this month too, therefore wouldn't expect a break above 91. All right, so anything above 91 is still uh, bearish in my opinion, which is basically this top right in here. Let me put a line there. Anything below this green line is downside in my opinion. So we could even put on this daily chart a fib and say, okay, this upside could stop potentially at the 38.2. It could stop at the 50. It could stop at 61.8, 78, 88.6. Those are all potential spots for downside continuation, with the target being roughly 84, 83.70 right down below, where there's two fib targets, confluence at the same spot. Okay, so and you can see how nicely this downside is on the Aussie. So I expect downside continuation underneath this green level. All right, this is the 4-hour chart. Another way you can actually take a look at how far that correction could go is by putting a fib on this very first up move here. And we can see there's a confluence at the minus 272 target and the 50 and the minus 618 at 68, 61.8. What are those levels? The minus 272 and the 50 fib are around 88.70. All right, so that is one level to be cautious of for this downtrend to continue. The other level, minus 618 and the 61.8% fib confluence, is around 89.20 to be exact. So both those levels, in my opinion, are high potential downside levels. What I mean with that is, at these two levels, there's a good chance that the downside could continue down to that 84, 83. So that's a potential 500 pipper. Of course, you never know. Trading is always a risky business. But in my opinion, if I had to choose between the Euro, Pound, and Aussie, I like the Aussie the most at the moment. Let's take a look at the dollar yen. If I can find it at least. Dollar yen, there it is. Let me show you this monthly chart first of all, okay? We had a very strong upside, pullback, continue, pullback, triangle, continue. So this is definitely a very bullish trend on the dollar yen. There's no doubt about it. Now the question is, how and when are we going to reach this minus 272 target, which is the usual target of a shallow retracement as this 38.2 was? Because what happened? We had an upside. Where did the uptrend continue? When it retraced down to the 38.2 fib and then started to bounce up. The target of such a bounce is the minus 272 at 110.80. Price isn't there yet, so we have some space up to that level. Okay, that is possible. But what happened last month? We did have a bearish candle. Now that's not very usual. You can see that in this upside, we've had hardly any bearish candles, only a couple basically, and those were within a wedge. So that is a bit of a bearish signal, especially a close that low, that near the low, excuse me. So is that just a warning sign for more downside, or is this just a retracement for more upside? All right. Despite the bearish candle, I'm still seeing it as a bullish potential. I'm not giving up on this. Let me say it this way: I'm still giving some extra benefit of the doubt to the dollar yen upside trend at this moment. Why is that? Well, if we zoom into the weekly, what do we see here? We saw this wedge and a break of this wedge, and this to me is looking like a hook back for more upside. Then if we put a fib from the very bottom of the breakout to the very top, what do we see? Price is right at the 38.2 Fibonacci retracement level. That level is a usual bouncing spot for a breakout like this. So I'm expecting a bounce at the 38.2 or the 50 max, 50% fib. If price were to break below the 50% fib, then my analysis would be changed, and we'll go through it next week again and see in what regard the new analysis would be. It's difficult to tell, but anything above the 50, anything above 101 is bullish territory in my opinion. The question is when and where. Will it be now or the 50? And if it does, how fast? But eventually I expect to move up to the minus 272 at 107.70, then a continuation up to the minus 618 and minus 272 target confluence at 110, where I have those 111, where I have those blue circles, right, or blue boxes. Down to the daily chart, and we can see Price is hanging here at that 382 fib. We already have a couple of day candles that are touching and tagging that. So will we break or not? That is the question. So that's the dollar yen. How about XAU USD? Let me take everything off and show you a fresh new chart and go to the monthly chart. Good. So what do we have here? We have a bearish trend, obviously, but we also have a potential double bottom, right? Last month was a slightly bullish candle, although there was a wick on top as well. So we are in a downtrend. We have a clear down move. We have a clear hook back. And we have a clear continuation. But last month was a bullish candle, and last month didn't break the low, which means there is a potential for this to be a double bottom, right? We only know that, though, really only know that for sure if at least this month doesn't break last month's or November's low. So we're still very far off from a potential double bottom or confirmation of that. But still, there is that potential. And we have a downtrend, but we just haven't broken that support level of 1180. If we do, there is a potential to fall down to 1100, maybe 1080 at the moment. If we don't, then there is a potential to bounce up and continue with this correction, and then it would probably be a double bottom. So how far could the upside go? Because we already talked about the downside. The downside is only interesting at the moment below 1180, down to 1080 or 1100. The upside, well, we did break already out of this trend line. And we did break out of this resistance as well. So if we break, for instance, above last week's high, there's a potential to continue up and challenge 1360, then 1420, and then even 1520. Right? Why 1520? Because there was a huge bottom here that was broken and now would act as resistance. Okay? So all of these resistance levels are potential targets for if the price breaks above this top. Alrighty, that wraps up XAUUSD. I thank everyone here for joining me and for your attention with regard to this live webinar here on today, Monday, the 3rd of February. We'll be back, of course, next week. We'll dive into shorter time frames. As always, the first Monday of the month, we always take a look at longer time frames to focus on the long-term picture and look at the monthly charts. The 10th of February, though, we'll be zooming into lower time frames, of course. With that said, I don't see any questions. Let me know if you do, though. In the meantime, don't forget to register yourself at blog.binary.com/weeklytradingroom, where you can get an email when the recording is ready. Good. So I thank you so much for being here once again, and see y'all soon. Cheers.